Auditors are responsible for examining the financial records, reports, and ensure accuracy, compliance with regulations. Primarily, when you talk about accounting as a professional, you need that accuracy, then only you can build trust. As an auditor, you need to see that whether the accounts are complying with the rules and regulations and they're being maintained accordingly. An auditor's responsibility to identify the errors and fraud becomes interestingly important. Good morning and welcome to the second session, Unit 3, second semester Company Law and Practice in BCom, where we're going to speak about company administration. In the previous classes, we were talking about the various responsibilities and roles, and here we're going to talk about the auditor's roles and responsibilities. Auditors are responsible for examining the financial records, reports, and ensure accuracy, compliance with regulations, integrity to the financial reporting. The duties include auditing and evaluating internal controls, reporting the findings. They also provide recommendations for improvements. Now, when you look at the role of an auditor, probably that's one of the most desired or dream profession I would like to say about. For every commerce candidate, they would say that I want to be a CA, I want to be a chartered accountant. Now, the real role of an auditor is threefold. First one is that they work for accuracy, because primarily when you talk about accounting as a professional, you need that accuracy, then only you can build trust. So when you're looking into a company's audit reports, their accounting books, you need to ensure that there is accuracy in each and every entry that is made. So the primary job is to ensure that accuracy with compliance, integrity. The second thing is that they evaluate the various internal controls. They look into the checks and balances. They look into the pros and cons of each and every step that has been entered, how it has been managed, is it on the right track? All these things have been taken up here. They also provide recommendations for improvements and ensure adherence to the professional code. So that is also very, very important here in terms of understanding the ethics and the various other factors. Now, the more detailed breakdown, let's start with conducting of audits here. First of all, auditors thoroughly review the balance sheet, income statements, cash flow statements. They try to understand their accuracy and compliance with the accounting standards. Now, various companies follow different methodology. It might be Indian accounting standards, the GAAP, that is generally accounting accepted principles, the US GAAP methodology or the UK methodology. So as an auditor, you need to see that whether the accounts are complying with the rules and regulations and they're being maintained accordingly. Followed by which, the auditor's responsibility is also about analyzing the transaction. So they see a variety of transactions, including the purchases, sales, investment. They check the validity and the accuracy altogether. So that is also an important thing. Now, testing controls, that's also very important, where they evaluate the various control systems to ensure they are functioning accordingly. So all these things come under one parameter. You are checking something, you are understanding, you're evaluating, and you are ensuring that there is accuracy in the given parameters. Right. So as we start moving further, we also need to know, where does the auditor actually help in terms of identifying the risk and discrepancies also. Now, they look for potential errors, fraud, and other financial irregularities. Nowadays, in organization, it is a very, very important factor. Rather, it's a mandatory clause, which I would like to say, that you need to be ethically right rather than just being accountability or just accounting right. Now, what I say here is that, now, from an accounting standpoint, yes, you know how to cook your book of accounts, but that is not what the shareholders want. That's not what the world wants. They actually want you to be ethically right, which means an auditor's responsibility to identify the errors and fraud becomes interestingly important. Next, it making any questions to the management or to the staff to gain better answers, better access, how the things are being done, what is the understanding for financial statements, all those things, the auditor's responsibilities comes into picture. Followed by which, reporting the findings and recommendation. The second part is that they prepare audit report, comprehensive audit report summarizing their findings and conclusion. What they have understood from the audit and what needs to be presented to the management. Why? Now, as an auditor, I would have prepared a report based on the accounts that I have gone through. But is that exactly translated to the way how the management wants? Now, to do that, I need to compile a report, tell the management what are the key points that I have analyzed as an auditor from your book of accounts. So that's where exactly they do this comprehensive study. They come to conclusions and they tell where exactly they have been doing this activity. They form opinion on fairness of financial statement, which may be positive or negative. Now, an auditor doesn't have to be always on to the right side trying to please the management. An auditor's job is more from understanding how good and how bad you are, which means to say, as an auditor, my primary responsibility is to understand whether we are doing good or whether we are doing bad. So, if certain things are not appreciated, they're not up to the mark, that means it's my responsibility to provide an opinion which they can correct, which they can go forward and change themselves. It might be negative, it might be harsh, it might be sometimes really on the face, but then that's the job of the auditor. Auditor doesn't have to please the management every time. That's not his role. His role is to identify the truth and bring it forward. Now, the next thing is that communicating with stakeholders. So they share their findings and recommendations with management, committees and other stakeholders, the responsible persons, and then they advise on improvement, where to suggest to strengthen their internal controls, improve the financial part of it, and then they help you to reduce the risk that comes on the way. So it's very important for you to understand how you can strengthen the internal process altogether and then reduce the risk factors that have been decided. Now, similarly, when we are talking about the other thing, adhering to professional standards, now auditors must follow relevant auditing standards, including the Code of Professional Conduct. Now, the Board of Chartered Accountants, that is the Institute of Chartered Accountants in India, what we call it as ICAI, has set some standards for every practicing chartered accountant that they need to follow certain professional ethics when they are delivering or discharging their duties. So it is the primary responsibility of the auditor to present himself according to the needs of the professional conduct. Now, maintaining independence and objectivities, auditors must be free from conflicts of interest and maintain objectivity in their work, which is very, very important here. That's 100% needed for the hour. The next thing is that whenever they maintain the independence and objectivity, which means to say that they are not influenced by any opinions or any thought process. The next thing is that ensuring confidentiality. Now, as an auditor, you need to maintain confidentiality on sensitive reports and information. There should be a non-disclosure agreement that needs to be signed, and you need to maintain that secrecy with your clients with whom you are operating. Anytime when you discover anything that is fraud, that is illegal, that is not according to the standards, you need to report immediately to the board. Followed by which the company secretary, which is the most important role in the company law, we are coming into it. He is a person who's supposed to be the key spokesperson, a person who complies with the legal, statutory authority and providing advice to the board and governance to the legal matter. They also play a very crucial role in organizing meeting, managing shareholder relations, and that of the smooth functioning of the organization. Now, as a chartered accountant comes into picture, similarly, a company secretary is very, very important for the organization. It's because of the company secretary, the entire company works. And that's very, very important for all of us to understand at this juncture. followed by which the statutory compliance and record, the compliance ensuring that they adhere to all relevant laws, regulations, and its own internal policies. They maintain the record, they maintain statutory registers like the members, the directors, the charges, as well as the minutes of meeting and other essential documents. So everything is kept by the company secretary. He is supposed to be a key person in the organization who manages each and every activity. Now, moving further, his job also involves filing of documents with the regulatory authorities like Registrar of Companies, ensuring timely disclosure of information, the board and the shareholders meeting, organization in terms of arranging the meetings, ensuring proper agendas, minutes of the meeting are being prepared. All these things have to be taken in charge by this concerned person, which means to say that it is very important that we understand, analyze the entire functionality here. Now, the next thing is that communication. As a company secretary, you need to talk between the shareholders, including the preparation of reports and notices. You should be in constant touch with the management by participating in every meeting, trying to understand the changes in policy, ensuring compliance, and also with that of the voting procedures. So whenever there is an important voting point that's taken place in terms of voting a director or an executive or any other important functionary roles, the notion, the appliance of a company secretary is very, very important there. Now, the advisory and governance roles, providing advice to various legal and financial matters, and also in corporate governance, what are the best practices that needs to be followed so that the organization is able to come up in the best way. So all these things are mandatory today for a company secretary to be on the best roles and guide the company throughout the walk of life. Now, the other thing is policy management, developing and maintaining company policies as they comply with legal standards and reflect company's objective. Whenever a company develops a policy, that has to be in compliance with the company's objectives and legal standards, and you cannot go outside the book to do something illegal in nature. Now, the other responsibility is communication, telling about the different schemes, the legal guidance. All these things are ancillary duties. Why? Because company secretary would also act as a guide, as an internal factor of legal activities, guiding the company, telling the shareholders what's happening, talking about the various schemes and how the policies can bring in welfare to the organization. With this, I come to the end of this particular session. I hope and believe that all the factors that we have spoken here will be of great use to you, both in terms of theory and in practical walk of life. In the upcoming session, we would be talking more about the types of meetings, why meetings are important, and how do they comply as a part of the company law altogether. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me today on this wonderful session.